World of money is changing, but most banks aren't ready for Bitcoin. Private Key Capital is the first credit union designed to help you move into the Bitcoin era, safely and confidently. With one account, you get both a traditional fiat savings account and a personal Bitcoin wallet. You hold your private keys, and we never have access. Your Bitcoin remains fully yours, and you are in control. For long-term holders, our Vault wallet lets you lock up your Bitcoin for a set period and earn a percentage while you hold. Private Key Capital, combining the stability of a credit union with the freedom of Bitcoin. Own your money, secure your future, and step into the Bitcoin era.
Good morning, and don't you love that ad? I am wishing you all a very good morning from lovely El Salvador. I'm Jay Bose, CEO of Private Key Capital, and it is an exciting time to be alive. I'm here in the new office in Santa Elena, which is in this lovely city of San Salvador, and we moved from our older office, which is a beautiful office too, but this one is got status, and it's in the heart of the city. I've got a beautiful view of the volcano. Actually, I'm going to turn my little camera around so you can sort of see outside. There's beautiful greenery, but there's also construction going on. Lots of high-rise buildings coming up. The city is exploding. This is the next Singapore. This is the next Panama, and we are at the right place at the right time. So I'm going to give you guys my monthly sort of update, but there's just so much happening in the Bitcoin world in the last 6 months that I really needed to telescope out and kind of share with you and walk you through what I'm seeing of the landscape. Because as we build this credit union, we build our vaults, we have launched our West Palm Beach office with a soft launch. We'll be doing a grand opening as well very soon. It's in the context of the bigger events that are happening in Bitcoin. So I would be remiss if I did not at least share my thoughts and my views and insights on what's happening in the Bitcoin world. And I'm sure you all have your assessments and understanding of it, but I at least wanted to share mine. And then based on that environment, how do we navigate through it together as a community, as a team? And what does it look for us over the next, 3 to 4 months? So in the past 6 months, there have been price moves, right? This whole Jane Street mess, for those of you who don't fully understand what the Jane Street mess is, I'm going to go into that a little bit. Michael Saylor's been talking a lot about the naked shorts in the market, paper Bitcoin, and how that, even though we believe there's a 21 million cap, and supply and demand equations don't hold, if you can artificially manufacture paper Bitcoin and keep selling those, you can actually drive prices down. So he has been vocal about that. And at the same time, there are certain regulatory shifts that are happening, in particular with the Clarity Act, and I'll delve into that. And of course, our work in El Salvador is actually, believe it or not, quite pioneering. We are the first credit union in the country to actually have native Bitcoin custody. We'll be the first credit union in the country, a financial institution that's regulated by the government, to actually start doing Bitcoin-backed credit here. So there's a lot of really exciting things we are involved in. And at the same time, a lot of it hinges on the price of Bitcoin. So, I want to look at some valuation models and price suppression. And if that suppression is removed, what kind of models are we looking at? And what should we expect? And what should we model around to build our business, right? So very much like this iPhone, right? Very much like this iPhone, I see Bitcoin as the iPhone for money. It's simple, it's powerful. You don't need to understand how it fully works, but it puts control in your hands. And so since, I just kind of looked at the charts from last night, from August onwards, the last 6 months, it's been a ride. It's been sort of a sidewards trend. In August, we started at about 55,000, weighed down by the rates and global nerves that climbed up to about 62,000 in September. companies added some Bitcoin to their books. It hit 70,000 in October. ETFs were announced. A bunch of ETF money came in, almost over $10 billion. Then it eased back to 65,000. November took a dip. That was a hard dip. It wiped out a lot of leveraged Bitcoin, and many of our friends and colleagues and members have taken loans against their Bitcoin. It's not been an easy path because margin calls came in when we dropped below that, went above that 83.3% LTV, and there were a bunch of margin calls, and that caused me to actually start to talk with some companies that can provide loans and through us, through our credit union, and I'll announce about that when we are ready, which will be no liquidation loans. So you won't actually get these margin calls. And those are new products. I don't expect banks to innovate. And so here we are, in the last couple of days, almost last 48 hours, as Jane Street got sued, they removed what they call the 10 a.m. algorithm. It is alleged that they were basically selling off a huge bunch of blocks at 10 a.m. in the morning, which would drive the prices down. And then they would, there's a gap between the spot market and the ETF market, and they'd buy out MSTR and so on and so forth, and at a low price. And so we'll look at that. I mean, these price moves are not happening in vacuum. But if I look at the macro picture, the market cap in those last 6 months from August till now has actually increased almost 20%. So that's a good sign, right? So within this tangled web of foul play or alleged foul play, there's this fellow called Rob Graneri who founded Jane Street and Quant. It's a high frequency trading platform that was doing 20 billion in revenue. Fast trades on stocks, options, crypto. Graneri has been this sort of behind the scenes guy, low key, sticking to his algorithms, but they've got a history, right? I mean, they got a history. Back in 25 in India, the state bank hit them up with a report accusing them for rigging the actual Indian stock market index, buying big at the open, pump up the prices, 15, 20%, then dumping the options, which they had already purchased beforehand, and making them, they made like huge amounts of money, $5 billion or more. A lot of it was called dirty money. They froze the assets. So there's some history here with Jane Street that is, this. So I'm not surprised if they're involved in the Bitcoin price manipulation, potentially here, because February 23rd, just a few days ago, Terraform bankruptcy suit basically claimed that the 2022 Luna crash was based on insider information that Jane Street got from one of the interns. Like, they pulled out $85 million from a pool just literally minutes after Terraform, pulled out 40, their 185 million, and the whole market took a $40 billion wipeout. So, they're fighting that case. They call it nonsense, but it just raises eyebrows when you see very timed trades that go in and wipe out entire markets. So strategy, I was reading Michael Saylor's, X account, and he basically believes this rehypothecation, right? That you've heard this word. What it does is it basically takes the same Bitcoin that you and I have for every Bitcoin that's actually sitting in the vault on chain, piles of fake credit is being issued against that one asset. It's like saying, I've got a pound of milk, but I'm going to make, yogurt with it. I'm going to make ice cream with it. I'm going to make cake with it. I'm going to make cookies with it. And I'm going to, 10 different people have used the same Bitcoin and done all kinds of instruments where, you're essentially creating fake money through this notion of rehypothecation. And so, Michael Saylor's view is, hey, if you can't take me to zero, you don't kill me, then I'm going to 1 million, right? So I kind of agree with him, because this is volatility noise. At the end, scarcity does win. And if we start to actually get the right kind of regulatory framework, I think this nonsense of paper Bitcoin is going to start to drop. And so specifically what is happening, what the gripe, I'm not a trader. I mean, we see Bitcoin as infrastructure. So for me, the question is far more important. Does Bitcoin become infrastructure over the next 10 years? That's the question I want an answer to. And for me, it's an emphatic yes. But many other people see Bitcoin as a stock, as a price movement. And those analysts who sit and every day look at prices going up, prices going down, they basically started seeing that at 10 a.m. every morning, the prices would drop by 2 to 3%, and it would trigger like a $200 to $500 million liquidation, right? And then Jane Street, who is an ETF creator for BlackRock's IBIT, can basically make shares, naked shorts, without actually any real Bitcoin, and they would hedge the future, sell the spot, and then buy it later, right? This distorts everything because you're getting these $62 billion worth of inflows from ETF, and it doesn't even raise the price. Like, how the hell does that happen? So, well, this is how it happens, right? So this is the way it happens, and this is the way. Now, they don't have proof yet. This is all just coming out as we speak, but certainly it looks a bit fishy, right? It looks a bit fishy when they start deleting every one of their text messages and X posts. So their whole X website is gone. It's just disappeared, right? So all of this sort of kind of points to, yeah, maybe there's something going on there. And certainly we saw that when that 10 a.m. trade was stopped, Bitcoin went up, 7%, 8% in a single day, just kind of validating the quiet strength of Bitcoin. We continue to believe in the fundamentals. We tell folks to push for self-custody. You hold your keys, you hold your Bitcoin, right? So in the meantime, we're hearing noises of the Clarity Act. Now, till now, Bitcoin has been a free-for-all zone, right? Refs are fighting over who's going to get the ball. The law, the Clarity law, kind of, again, many of you have already delved into it because we are enthusiasts of Bitcoin. We want to understand what's going on. But for those of you who do not know what the Clarity law basically says, it basically says that, look, guys, we're going to treat Bitcoin as a commodity, just like gold. And CFTC will handle it because it's a commodity. Now, the stock-like tokens, so once you, we're going to tokenize this and tokenize that, those tokens are going to go under the SEC. So tokens will become a security, but Bitcoin will become more of a commodity. And therefore, Bitcoin will be governed under the CFTC rules, and tokens will be governed under the SEC rules. Now, this clear ruling, allows for exchanges to start operating like a legitimate institutional organization. And I think it gives a great deal of legitimacy to Bitcoin. It gives clarity. We don't have, central bank overreach. The House has already passed this, as you know, back in July 25. I mean, the Clarity Act was already passed. The Senate is planning to vote on it. So, some claim that it'll be done in March. I don't know, but we feel like it's at hand. And if it does, it'll actually provide a tremendous amount of clarity, cutting out the uncertainty, which will draw big money. And, the big money, I'm not just exaggerating, it could be trillions of dollars. I mean, that's the sort of potential, there can be a huge sucking sound. We're at 2 trillion, gold's at $22 trillion. So there's a lot of price movement and a lot of value movement that can happen once we are regulated by the CFTC. And it locks Bitcoin as a non-security. It curbs these tricks that trading companies like Jane Street are playing. It frankly boosts the United States as a leader of Bitcoin. And it speeds up adoption without losing the core thesis of decentralization. So it's almost like, if I was to take that iPhone analogy further, it's like, guys, it's been standardized. You can open an app store and you can start putting applications in that app store, and it's going to run on the iPhone, right? That's the kind of ecosystem explosion that happened for iPhone. And I believe that's the kind of ecosystem explosion that can happen for Bitcoin the moment this sort of regulatory clarity, comes into play. And the other thing that again, I'm still trying to answer the question. Bitcoin is infrastructure. It's here for the long run. It's here as a store of value. Your home is no longer going to be the store of value. Your Bitcoin sitting in a secure vault with multi-sig keys is going to be the generational store of value, right? Now we have almost 200 million addresses with balances for Bitcoin. There's about 100 million owners, and almost 68 to 70% of all of the Bitcoin supply is held by retail, right? The ETFs are about 7%. And so we feel like there's a tremendous opportunity for even remittances and treasuries markets to grow. Look, if we can move value across the Bitcoin rails, and even with different exchanges, and we can use different types of structures eventually, including Lightning, to move money. As more and more money starts to move, more and more transactions start to happen in this network, I think the value creation is going to increase very significantly. Many of you know the Metcalfe's law, which basically says the value of a network, and the Bitcoin is a network, the value of the network grows with the square of the users. So N square, right? That's Metcalfe's law. So at 200 million, that 1.3, 1.5 million trillion market cap sounds about right. And that means if we reverse and divide it by 21 million, what it tells us by Metcalfe's law is Bitcoin should realistically be about at 85,000, 80 to 85,000, right? We're still sitting at 67, I think, this morning. So what I wanted to do was say, okay, if these foul play type of things are stopped, where do we see the bounce going, right? I mean, yes, eventually, hopefully it'll go to a lot higher, but within the next 2 to 3 months, as Bitcoin starts to restabilize, we start to have normal trading again, I think Metcalfe's law is saying, based on the number of wallets, it should be right about 85,000. There's another metric that I look at because we are big into mining, which is hash rates. So we are right now, as of this morning, at roughly 1,025 exahashes, which is a lot. We're up about 65% year over year in terms of the hash rate. And so based on that, that model, based on that hash rate in correlation to the Bitcoin price, in the next 3 months, the hash rate is predicting, based on based on math, somewhere between 85 and 90,000 in the next 3 months, right? So Metcalfe's law is coming around that, just pure math. Again, if you believe in Metcalfe's law, which has proved very well for semiconductors and other models, and other networks, internet in particular, hash rates have actually traditionally been fairly good, solid indicators, because that's what keeps the Bitcoin machine running, right? That's a Bitcoin network. That's predicting about 85 to 90,000. And frankly, as continued, clarity comes and this fog starts to clear, I think the adoption is going to go up too. And we should have some rallies over the next few months, both alleviating some of the short pressure, some of the margin calls that many of our customers have been getting. And it's been a tough thing, right? It's been on everybody's mind, and I've had a lot of calls with a lot of our investors, our partners, and it's not been easy. It's been a tough time for many of us. But I kind of feel like that the bottom And again, I don't want to predict price, but it feels like the momentum at least is going in the more positive direction. And I think that $85,000 number is going to be more likely over the next 3 months than the $55,000 number. Again, what happens, God only knows. But what other shoes can drop, we don't know. But this is sort of my macro perspective on, I think, where we are right now, what some of the factors are. And I'm just going to take a quick commercial break and then come back and share a little bit more detail about the credit union and what we are doing here and why it's important to start to get engaged in the process. We've got some really exciting updates to give you, including I'm going to give you an update on the vault. So I'll keep you hanging till the ad plays and our sponsors get paid, and we'll be right back.
The world of money is changing, but most banks aren't ready for Bitcoin. Private Key Capital is the first credit union designed to help you move into the Bitcoin era, safely and confidently. With one account, you get both a traditional fiat savings account and a personal Bitcoin wallet. You hold your private keys, and we never have access. Your Bitcoin remains fully yours, and you are in control. For long-term holders, our Vault wallet lets you lock up your Bitcoin for a set period and earn a percentage while you hold. Private Key Capital, combining the stability of a credit union with the freedom of Bitcoin. Own your money, secure your future, and step into the Bitcoin era.
And we are back. So we built Private Key Capital and the Private Key Credit Union as a part of Private Key Capital in El Salvador because this is the place where you can actually natively custody Bitcoin in your wallet. And when we say in your wallet, it's really important you understand that. So that we opened this company, we acquired the old Private Credit Union, we renamed it, Private Key Credit Union. And then what we did was we said, okay, let the first 100 members come in with just a traditional savings account, which is what this credit union used to be authorized to do. Subsequently, what we did, our intention was always to integrate Bitcoin into this. So we applied for what are called digital asset custody licenses. And that is a license that augments and enhances our traditional credit union licenses. We are fully regulated under the El Salvadorian banking laws. And we received the first Bitcoin custody license. Because even though the law had been on the books in El Salvador for a long time that banks can custody Bitcoin, banks actually didn't have technology. The banks in El Salvador didn't actually build out wallets. They didn't run Bitcoin nodes. They just had the law on the books. So it took someone like us from the outside with Silicon Valley experience to come in and say, okay, we have the savings account. Let's build a wallet. And so over the last 9 months, we developed intellectual property. I hired a team of developers and coders, and we delivered in a very, very short time. We didn't just white label somebody else's wallet. We didn't just go and just say, oh, let's just plug something in and see how it works. We actually integrated the entire backend system. So you got the fiat rails on one side, you got the Bitcoin on-chain Bitcoin rails on the other side, and we married these two pieces of technology and created our own wallet called Private Key Wallet. And so this hot wallet got launched last month. And again, like any other new technology, we want to be very deliberate and very cautious. And we open it up to our first 100 members. And I believe we have already had more than 40 to 50% of the members who have opened up their, you can't get that hot wallet until you actually have your savings account. And to get the savings account, you go through the whole normal KYC process. You have to, give your driver's license, your passport, you have reporting requirements. All of that stuff is done exactly like a regulated credit union. But then your savings account gets linked with your hot wallet. And what is so unique about this hot wallet, it is still a non-custodial wallet, which means even though we are running these wallets in completely secure nodes that we ourselves run at the credit union, there is only one key to this wallet. So when we create this wallet for you, when you actually create it yourself, you put your 12 words and you get that. You're the only one who has it. This is kind of really important. See, the bank, I don't have keys to that wallet. So it's completely secure. It is your keys. It is your wallet. And you can move Bitcoin into that wallet just like you move money into any other wallet that you have, be it an Exodus wallet or a Cash App wallet or anything else. And you can pay from that wallet to anybody else you want, right? So this is kind of interesting because you have this wallet and you can put money into it. And what we are now building out is the API where when you put Bitcoin into your wallet, you'll be able to move over a part of that if you want to sell it into your savings account in US dollars, or if you have US dollars sitting in the savings account that you want to buy Bitcoin, you will be able to buy Bitcoin and put that in your hot wallet. And that we have already launched. So this is not something in the future. This is something that we have today. But here's where the real innovation and excitement is right now. And I'm happy to share with you guys that we are very close to completing what we call our Bitcoin Vault. Now, this is really a complete level up in innovation because this vault that we are building sits adjacent to your hot wallet. So let's say you put 2 Bitcoin into your hot wallet and you say, you know what? These Bitcoin have just been sitting in my Exodus wallet or in my cold storage. I move it to the hot wallet. Now you have a choice. You can say, I'm going to move these 2 coins into my vault, right? And you'll be asked, are you locking this in for 6 months, at which you'll get 3.5% interest, or are you locking this in for 12 months, where you'll get 4% interest? So when you actually put these 2 coins into the vault is completely air-gapped. Once you put that in, the vault is not even connected to any system externally. It's completely air-gapped, and it is isolated, meaning it actually sits completely secured inside a node that we run, and it's on chain. Your Bitcoin doesn't go into a pool like many other companies do. Most of the OTC companies, most of the lending companies, they take your Bitcoin and they put it into a treasury pool, and then they do all kinds of bad things with it. They actually generate yield from it, they wrap it, and all sorts of things. Not cool, because that actually exposes your Bitcoin. It doesn't stay in your wallet on chain. Now, in the vault, when you put that in, you don't have the right to take it out for that period of time, right, that you signed for. But it's generating 4% interest. So you're going to get your 4% interest when you move these 2 coins that are sitting in your account, which you don't get in your self-custody wallet, right? So that's one big difference why you would want to put money into the vault. And by the way, we're going to start the vault with a 1 Bitcoin minimum. Again, it is not for everybody. I understand that. But in the beginning, we're going to require a 1 Bitcoin minimum for the vault and get this 4% interest. It is completely air-gapped, and so it is entirely secure, and it's on-chain, so it's on the Bitcoin network, right? This vault has 2 signatures. This is kind of really important to understand. And it's a multi-sig vault. And what happens is one of the signatures will stay with us in a very secure manner. And the other signature is going to be with our liquidity lending partner. What does that mean? It means that 2 things. Number one, we are able to lend against that deposit, the the Bitcoin stays where it is, but there are liquidity partners who can give us credit up to 70%. I'm probably not going to do more than 50% LTV. And we can actually use that credit that we get, US dollars that we get against Bitcoin collateral and give out loans to people, which generates, let's say, 10, 12, 13% interest, of which 4% goes to the depositor, right? Part of it goes to the liquidity provider, and a part of it stays with the credit union as our revenue. That's how a bank or credit union makes money. So what happens is it's a very, very secure way, because let's say you move your Bitcoin into your vault. It's completely air gapped. It stays entirely secure with institutional grade security. And we have built two features into it, which are really, really interesting, which nothing that you have on your self-custody can even come close to. One of them is called a time lock. And what the time lock says is this: let's say you locked in your money for 1 year or 2 years or whatever the case may, 6 months, right? And let's say for whatever reasons, you pass away, or your beneficiary says, hey, I don't even know what these 12 words are. I don't know where they are. I'm the true beneficiary. Basically, the time lock will open up that wallet to the bank, to the credit union, after 1 year of contract expiration. So let's say you had one Bitcoin sitting in your Exodus wallet, and your spouse or your family doesn't know what those 12 words are, and something happened to you, you lose that money. Nobody else seems to know where those 12 words are. But when you custody it with us in an institutional capital, what happens is, even if you pass away and your 12 words are not there, the time lock feature will actually auto unlock one of the keys at the end of 12 months. So let's say your contract ends at the end of 2026, it'll unlock that key at the end of 2027. So your beneficiaries will still have to wait for 12 months, provide the paperwork that they're the legal beneficiaries. And if they do, they can get access to that value, to that Bitcoin, to that capital. Really important when you're generating legacy planning. Really important, because it gives you the peace of mind. Not only am I getting 4% interest, not only does it have institutional security, it actually allows me to feel safe that my future generations will not lose all of this because I screwed up with my 12 words. So that's kind of really important. The other thing that we are putting in and into this vault is the option to have downside risk management. What does that mean? It means that you will have the option of buying a structured finance product, which is not going to cost you anything, really, in real terms, with a partner company that will be able to halt and protect and give you insurance against a total slide in Bitcoin. Because as we continue to build generational wealth in this asset, in this credit union, now we got 10, 20, 50 Bitcoin over the years that you've accumulated. You want to make sure that there's a downside risk protection. And you can buy different types of downside risk protection, which basically ensures the value that you have. This ain't no FDIC, you put $1 million and you get, $100, $100,000 insured by FDIC. This is kind of like an insurance and a downside put option risk protection that basically secures your wealth long-term over generations if Bitcoin was to start to go into a slide for any reason. These are the type of structured finance products that we can provide at an institutional grade that you just can't do with, the mom and pop wallets. The last thing that you do with our wallets is even more interesting. Again, I've already mentioned it, but now we are in serious talks with a company that can actually provide us a completely accepted Master or Visa card as a credit card, not just a debit card, but as a credit card linked to your vault. So if you were to come in and put $1 million of Bitcoin into the vault, not only do you get your 4% interest and all the institutional security and legacy planning and downside risk, you also will be given a credit card, a private key black card with $200,000 in credit line. So up to 20% of the value of whatever you have put into the vault. That is your credit line. You can go spend it anywhere where MasterCard or Visa is accepted. And you can pay it back within 30 days and you won't be charged any interest on it, right? We will make a piece of every transaction on that credit card. So it's a greatly beneficial financial model for the credit union as well. So we are actually actively working with 2 potential partners. And after we launch the vault, we start to get the deposits and the loans. We're going to launch this credit card product, which is going to be incredible. So if Bitcoin's at $100,000, you're going to get the moment you put that 1 Bitcoin into the vault, I'm going to issue a credit card to you automatically. It's a part of the value that you get for putting into the vault is a $20,000 credit card. And as Bitcoin price goes up, every month your credit line will be adjusted with the price appreciation. And by the way, your Bitcoin remains your Bitcoin. So after 10 years, if it's $1 million, that's your $1 million. That's just how it works. So these are some of the really, really innovative and exciting products that we're coming to market with. And we're building a structure in such a manner that as El Salvador not only continues to grow and lead the world with clarity in terms of Bitcoin adoption, we are also going to activate the Lightning Network on our nodes. And what that's going to allow us to do is do a lot of smaller transactions, everyday transactions that our members would like to do on the Lightning Network. So that is also coming down the road. I'll be discussing with the dev team today, what the product roadmap looks like over the next 6 to 9 months. These are big infrastructure projects that we are building, but it's really, really exciting. And as other jurisdictions over the course of the year, whether it's in the United States, whether it's in Costa Rica, whether it's in other Latin American countries that want to adopt Bitcoin and do similar legal structures like El Salvador, we will be able to expand with our products and services into those countries and those jurisdictions as well. So very, very exciting things are happening here. So in closing, Jane Street highlights the friction, but what I got out of this whole mess is that the Bitcoin core really held strong, that in spite of so much downward pressure from people, Bitcoin held. It held. It didn't break like Terra Luna. It didn't go to zero. It didn't wipe out, $40 billion of Terra Luna got wiped out. Bitcoin grew in size of its network. It grew in the number of users, and now it's going to grow in price. And I really hope that the Clarity Act passes smoothly in the Senate. I think we are going to see some upside here. I think at El Salvador, what we're doing right here is going to have some real impact. We're going to create rails to move money between countries. And so our strategy remains very clear: accumulate, secure, and build. Bitcoin is infrastructure. I'm the only one saying that right now. Everybody else thinks it's some liquid gold and it's this and it's that and it's price and it's dollars and it's stable coin. No, it's infrastructure. It's bridges, roads, and tunnels. It's moving value across a very secure network. And yeah, by the way, Michael Saylor put in $3 billion to jumpstart quantum security. And we have trillions and trillions of dollars at stake. You think all of the stakeholders are going to sit back and wait for a couple of nerds to try to hack in with quantum security? It's not happening. You see, that weapon works both ways. If OpenClaw and Claude can be used to break something, it can be also used to secure something. If quantum actually has 1,000 qubits that start to come in, which it doesn't, it can hardly stabilize 100 qubits right now. But if 1,000 qubit become reality Okay, drops it down from 10 million years to about 10 years. We can put a strategy into place to move money between wallets, and so these are all hypothetical worries that the fiat and the dying fiat world wants to put out there. You think that 4-digit PIN code that you have is more secure than your Bitcoin wallet, SHA-256? Think again. The same guys who are telling you that quantum will break Bitcoin are the same guys who issue 4-digit PIN cards on your credit card and your debit card. It's absurd, right? So accumulate, secure, build, and I'm gonna just close up on saying that I am so thrilled with the soft opening of the West Palm Beach office. It is going to be Private Key Capital's headquarters. It's a fabulous location. I had the privilege and the honor to go to a couple of these Miami and West Palm Beach parties where there were a number of our members, very high value members, who were so excited about this new location. We have interviewed a number of people, and Nathan's working hard on bringing in a gentleman who I think is a perfect fit for running our operations and our memberships there. And so that's going to start to happen, and you will get an update in your emails, fairly shortly, when we're going to do a grand opening over there and start to engage that community as well. So there's tremendous work that is happening. There's tremendous excitement. Stay positive. Bitcoin is taking these blows and coming out stronger. This is a sword, a samurai sword forged in steel. It's not breaking. It's resilient the way it was supposed to be. It is we the people's value and money. We hold 70% of the coins. They can't take it away. They can't destroy it. They're trying and they're failing. And every time they try, we become stronger. So stay very positive. This is very good what's happening. It's a rite of passage. And I love each one of you. I really want us to stay on this path of building the Bitcoin ecosystem, continuing to grow, continuing to build infrastructure, and we will all benefit from the growth in Bitcoin. This is Noah's Ark for the breaking old fiat system. Jump onto it. God bless you. God bless America, and God bless El Salvador.
The world of money is changing, but most banks aren't ready for Bitcoin. Private Key Capital is the first credit union designed to help you move into the Bitcoin era, safely and confidently. With one account, you get both a traditional fiat savings account and a personal Bitcoin wallet. You hold your private keys, and we never have access. Your Bitcoin remains fully yours, and you are in control. For long-term holders, our Vault wallet lets you lock up your Bitcoin for a set period and earn a percentage while you hold. Private Key Capital, combining the stability of a credit union with the freedom of Bitcoin. Own your money, secure your future, and step into the Bitcoin era.